What is up, guys? It's CJ here, and welcome back to another trade review and session review on NQ on NASDAQ. Today we're trading micro E-mini NASDAQ, and as always, we're trading Wyckoff and SWT now, the proprietary system that I am building. So here you don't see my trade. This is the ideal trade. I took a lower RR, but we are going to go through the whole session here. This is going to be a value-packed video, so make sure to hit the like button, leave a comment, and subscribe if you are here. This was the entry right here. It was based on, I believe, a 5-minute inverse for value gap, but hey, we are going to get into that. Just wanted to give you a look at the trade of the session, but it is going to come at the end. So there's a lot to cover in this video, so let's get rid of all of this. You know what? We'll get rid of everything. We'll get rid of everything, and we'll back up the session to the beginning, because that's where we always start every morning. So right here, guys, where we can see that NASDAQ is in an accumulation model. So starting the day, this is our plan. You know, we're relatively bullish, but only if we can get some confirmations here. So starting off the session, getting this out of the way. So this is our LPS POI that we had here. It was a 5-minute order block right here after a confirmed STB. This STB got confirmed with market structure on the 5-minute right there. And then we came up, swept extreme liquidity right before New York. New York is not opened. It opens on this next candle. So what was I watching? I was watching this 10-minute fair value gap that was the highest time frame. So I was watching this 10-minute fair value gap. Something to note is that there is a 15-minute. I want to put that on the chart just to see what happens here. So there's also a 15-minute. Just going to make it lighter. Been using these, well, putting a box around it just for better entry triggers. But what I was looking at, so it's potentially not valid, but I was looking at this 10-minute. It was a couple other time frames, but I was looking at this 10-minute if we did want to blast on the open. So just before the open, we did. So this is going to be learning experience. So right there, and then straight back down. I did place a small limit right here when we did invert that, but look at this, guys. So this is a mistake by me. This is a mistake. So the mistakes are just as important. So I was running something like this, I think. Something like this, running that up to at least London. Oh, we did delete London. So we have Asia right here. Let's go over our sessions, obviously. So we have this London high draw on liquidity, super nice. And you just know that New York will want to be going for this. So having that on. So guys, look at my mistake here. This is very important. This is probably better than the winning trade, you know. So what I missed here was this 15-minute fair value gap. You want to be taking the highest time frame fair value gap and also the biggest. So this is a great mistake right here. As soon as I saw that here, I knew that was potentially where I did mess up. And so you end up not being able to get above that fair value gap and coming down and stopping out anyone who took that 10-minute inversion, coming right back into demand. Have we closed this 15-minute candle? I think we have. When we did, we created this rejection block. What color do we want to make rejection blocks for bullish? I'm not even too sure. Let's make them like this color, slightly different. So, or maybe let's make them, you know, a little bit darker. Not sure what I like. Let's make them this color. So you get that rejection block creation. Whoa. Okay, that candle wasn't closed. Replay mode. Yeah, okay. You get that 10-minute rejection block, and then you did come back into it, and now you're expanding back up. Next candle, that wasn't closed. And there you get that expansion back up again. Perfect. So there you did invert this fair value gap. So you can maybe just leave it there like that. Does get inverted, confirming this as an LPS. There we go. We'll make it just light. We're not entry triggering on it. So was there a retest? I'm not too sure. Where to put the stop, I'm not sure. Probably there. You got to be discretionary with the stop. This is not a trade that I don't think I would take. I think we're mostly just building context in this model right now. Didn't really give too good of entries. This is also a break of structure entry as well, because we just broke this 5-minute structure. No, 3-minute structure back to bullish. So valid if you did want that. It's a swing trade probably though, because we're not sure if we'll get it intraday. This is a bigger model. Let's see the time duration on this guy. And it's a 1-day range. It's a 1-day range, so it's less likely to play out intra-session, but that's a valid entry right there. Depending on where your stop loss is going, it's just not that higher of an RR, so it's just not the best, but you do end up inverting that right there. So we failed to do it off the open, and then we just had to come down, New York manipulation, and then blast back up. So there you take that London liquidity. It was trickier. It was trickier today for sure. Took some notes, and it's just really good to study that. So let's see what happens next. Okay, so what was created here, this whole area now becomes structure demand, range demand, if you will. And same with this structure demand, leaving an inefficiency right there. And even this order block right here. So definitely a bullish area right here. Did you get any structure breaks? There you get that 2-minute break of structure back to bearish. Now you're forming a range. Too far. Okay. So you had a lower time frame break, no breaks on the 3s, and we came into this structure demand. Perfect. Now, do we see any fair value gaps here? Nothing on the 5, nothing on the 3. And then on the 2, we see this fair value gap right here. It's not that big. We do see this one right there. So we can pull our range from low to high. The range is going to disappear, unfortunately, there. I think if you need to go to the lower time frames, just go right there and then pull the range. I think that's the meta, guys. Perfect. So you had this, you came back down, leaving this buy side liquidity right here, resting above, and you're getting this range. So how I'm liking to do this is I like to look at the Wyckoff range on the lower time frame, but I like to have the higher time frame POI because we need the highest time frame. So it's almost like the reverse of a break of structure where you're kind of going down to the lower time frames, but you're actually going to the higher time frames now when playing these models. So we're having a nice range deviation, so we can be looking to play an SW2. It looks like you didn't quite sweep that level. Oh, you had some nice refined demand though. Very clean level right there. So you can be knowing we're in a clean demand level right here. Have this on our chart. What was that? The 2-minute? Is this 2-minute closed? I believe it is closed. So if this is closed, that's your entry trigger to be going long. It's not the highest RR, but you're trading pro context. As we've just come up here, yes, we've swept this liquidity, but we can also be thinking we have this London, or sorry, this Asia, but we came down leaving sell side, buy side liquidity. Not necessarily have to be going for that, playing that candle body, and potentially running for this high, TP1 at this high, or just de-risk once we get there, and then we have a lot of liquidity above. So I'm going to play the next candle. And there you do get wicked into the play after closing above this line. You do, that's your candle closure. Limit, you are into this play now. So how does that look on your 30 seconds? Looks beautiful. Interesting that you had this move down, but this order block just pushed price down. Looks like you came into the old 30-second IFEG right there, but then you bounced off. Something to note is I believe you also created demand. So I'm going under candle bodies right now. You got to be careful with that. It really got to be discretionary. With this type of trading, safest play is definitely to go under this wick right there. So if you did, you'd be running it. Let's say you went under this wick because you can come down, you know, and put in a proper third tap, but we're definitely getting positioned on that first deviation. Very important, getting positioned on that first deviation because you can be trading an SW2, which is a 2-tap model, or it can put in an LPS in extreme demand, but it does not have to. Very important. So I don't know what time frame we want to watch this. Maybe the 45-second. Let's see. So if you didn't like this supply, you could see that supply get hit first and then be limiting there. Either way you're betting on the trade, right? Either way. But you can see how we perfectly retest that level, and there you would hit full TP. So little SW2 right there. And these session reviews were showing every trade. So you can get rid of this. Target was hit. And that's a 2-minute inversion right there. See these stacked highs? Doesn't matter that there's some supply right there because we have like look at how many highs we have. We had high, 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 all the way up, and you just sweep that liquidity. It's a liquidity game, guys. It's just a liquidity game. So come back into refined demand, and it's right, this order block is right on top of this structure demand. It's a great level. Love supply and demand as well. Like still nothing bad about supply and demand, and just look at that level that you just retested. Like the algorithm just loves the IFEGs. So gonna get this off the chart, and now let's look for the next play. So we're expanding up. Now we have this range. Perfect. Do you create any demand? 30-second, maybe 15-second structure demand right here. That's basically it. You had an order block down here, but it's the bottom of the range, so we have a rule for that. Looks like it's mitigated there on the ones. So there you're getting a deviation of that range high. Did you sweep anything? Swept this liquidity right there and this liquidity, so you came all the way up for this liquidity. Getting a quick call, if you take that after. So liquidity sweep right there. Valid to be looking for an inverse right here. Highest time frame, 1 minute. It's not my favorite trade, but we're going over every trade because, you know, sometimes you're going to miss some trades and we just want to have a lot in our bag. Kind of a 3 drive coming into that range high deviation liquidity sweep, breaking down right here, 1 minute IFEG. You would have had to maybe take that. If I would have taken, you could be looking for something like this to knock us back down. as we just broke structure back to bearish right here on the 1 minutes. Oh, look at that. You do get tagged into the trade. Look at that. Beautiful. Beautiful trade right there. Wow. I actually wasn't sure. I wasn't sure if you got that retest. Beautiful little trade right there. So already 2 trades, even if you would have lost off the open because you were like me and you forgot about that higher time frame for a value gap right there that knocked us back down. So 2 trades there on the board for NQ. So you could be holding this. You could still be short here, but you know, it's very unlikely when you're trading this types of models. Let's see if this was a mini Wyckoff. Kind of, almost more like a PO3 3 drive, but look at the algorithm, guys. Look at that algo. Ticked in non-drawdown for a single second, 3.17 RR to this low based on this breaker structure, right? So that's a valid low to target. That is so clean. So I was in a tournament today for Hyro Trader, a crypto prop firm. Team ended up winning, but so I wasn't too present for this PA, these 2 models, only with the very start to take the loss, and then these 2 models played out right here. That is some nice stuff right there. That is a really nice inverse. We all need to be studying this. 3 drive, so liquidity sweep, 1 minute inverse, breaking structure. So our entry triggers are working together. You're getting that breaker structure and then you're playing that inverse. Bang. 3R. Beautiful. Beautiful. Okay. Now what? Probably could just short the supply. After that, market makers would probably be wanting to protect that. Take it out. No, you come down leaving liquidity. So, okay. Let's look for any lower time frame POIs in here. It's kind of just liquidity. It's a dicey POI. But range is looking really, really nice. You had this PS right here that swept liquidity. Probably came into this order block right there, something like that. So let's be watching this range now. Overall, we're still in a more bullish environment. I would say it's pretty neutral though. We're at EQ. It's not the absolute best. We'll see what happens here. Is there anything to play right here on that range deviation? Not really. You have that fair value gap higher. Nothing too crazy. Slightly getting above it, but doesn't look too appetizing. No demand created. Let's check. Came up leaving liquidity, barely getting above that. Yeah, basically rejecting back down. Maybe that was a higher time frame even. Oh yeah, look at this, guys. So you weren't able to, so the highest time frame is actually that 3 minute. Very, very nice. Very nice. Also a 3 minute order block. That's where you're rejecting from. So not valid. Not valid. Always look at that highest time frame. That is not getting inverted. Absolutely not. So that fair value gap did its job, rejecting price back down. Now we're taking that low again. Watching for fair value gaps in this leg. I'm going to play another candle here. Okay, so there was nothing there. 30-second. Is that the highest time frame? 45-second. Nothing there in the 1 minute. So actually, I don't know. I haven't backtested too much of the 45 seconds. So let's just do it for this video. I'm normally a 30-second guy. You saw we had that 30-second, but let's go 45-second because now we're potentially having a Model 1 here with a PS. This is that order block that created the fair value gap. So if we do invert it, no dice to the supply. So we can draw our liquidity curve like this if we are going to invert this. So here's a nice little model. Let's look at it on the 30-second. So that 30-second and that 45-second are exactly the same. So we might as well just play this on the 30-second. You know, let's build a model. Let's build a model. Like, there is so much power, I think, in building models on the lower time frame because because obviously the lower time frame you go, the more discretionary it is. So if you can have your structure on your side, why not? So basically just another deviation of that range low. We're watching this 30-second as it is the highest time frame, which sometimes can be nice, guys. Sometimes can be really nice. There you're inverting that. There you're inverting that POI. So valid to either take that probably run to this target above, but obviously like this is the technical target. Would be good to get a pullback too, but it's not guaranteed. And I never traded this, so I do not know if we do. Ah, you do. Okay, perfect. Okay, perfect. Getting filled on that, so you can actually have a nice RR. 2.47 to that technical target. Nice. Using that fair value gap again. The inverse fair value gap again. Now this is shaping up. Damn. As if this Friday session had some bangers. I was looking at crypto. Oh. Okay, so price gets up here. We're going stop loss to break even. No reason to lose money on this. Or you could put it under this low because we did have this demand. So it's always nice to get that demand creation right there, right on top of your IFEG. Beauty. And right there, you're hitting TP. Another 2.47. So there's literally been 1, 2, 3 trades within this range using SWT concepts. Solari Wyckoff theory. So this range is now complete. Maybe we'll just grab a quick screenshot of it. I don't know what time frame we want to use. Potentially this one. This 30-second looks really nice. Guys, take notes of this model. I know that I am. I don't know how I want to do this. Maybe like this. Absolute beauty right here. How long are you in this trade? 36 minutes of sitting in this guy. It's pretty nice. We're doing, for SW1s, we're doing this symbol. It's for TradeZella. It will make more sense later. But basically, these models will be able to be journaled on there as my vision, because I really like that journal. Get this range out of the way for a second. Grab this screenshot. Then you're hitting take profit right there. Really nice model, honestly. Liked this one. Let's check volume quickly. From that PS to confirmation. Nice. So you get that value area low backing you there. Perfection. That's really nice, guys. Really, really nice. Going to just paste this quickly. And let's move on. So an SW1A, a Wyckoff Model 1 accumulation. Let's just get rid of everything now. Model has played out. And let's go back to our bigger range, because now it's getting very interesting. We came up, we were in that trade for 37 minutes, and we came up leaving another returned zone. So what do we have up here for third tap POIs for any sort of shorts? Well, we have this 5-minute rejection block. And for bearish ones, I think we're going like this. So you have that 5-minute rejection block. Ooh, look at that 10-minute rejection block, guys. That's nice. That's a nice rejection block right there on the 10s. 15-minute, not as clean. So like that 10-minute rejection block, do have that Asia high to worry about, but I have a rule to not get married to POIs like that unless it's super close and it's like a London high, super close. But we can see that we're building a pretty interesting model here. So we talked about that 1-minute BOS right here. That can be confirming a UTAD. So we're going to build our model here now. And guys, there's plenty of time to build these models when you're kind of just sitting and watching price action. It's honestly kind of like nice for the mind, to be honest, unless you're looking at a bunch of different other stuff. Sometimes I am, sometimes I'm not. Sometimes we're like pulling up like a bunch of volume POIs, but once you have your POIs, you're kind of just sitting and waiting for price. So you can kind of just be filtering around in your mind, like what makes sense. Like, can we get a model 1 into this Asia liquidity? You know, that could be interesting if we did this, but then we would be disrespecting our 10-minute rejection block, which we can do, but obviously we want to take confirmations in there. We also have this extreme liquidity sitting right before that rejection block. So that being the extreme liquidity of the range. Put that on the top because the range is close. So basically, let's just kind of watch what price does. Okay, so we're shooting up there. We got to grab our highest time frame for value gaps, as we always do. So price is entering a POI. What do we do when price is entering a POI from a Wyckoff standpoint? We're grabbing those fair value gaps. That's what we're doing. So this one doesn't matter to me. It's this one that I care about. 5-minute, 5-minute, guys. Let's just see another 5-minute candle. 5-minute, guys. So this 5-minute right here, that's the one we want. Beauty. So can literally just sit on the 5 minutes. You could obviously also look at the model. So if these points are correct, what are we looking for? We're looking for an LPSY. Sorry, yeah, an LPSY. Let's just get this rejection block out of the way. It's a nice third tap POI for model 2. Obviously, we can go higher for model 1, but we have to assess the model 2 first. So nothing is confirmed until you see that 5-minute. Is there anything else at the top here to like? So it's like level 2 break of structures. If you guys know break of structures, like you can have your level 2 breaking before the level 1. So if this is like your level 1 break, or your level 1 market structure, right? Just a quick market structure lesson. And then you're having your level 2 like this. Sorry guys, I drew that backwards. How do we need to do this? We need to do it like this. Oh my. Okay, that's like kind of making sense. I think I just drew it wrong. God damn. Like this, sorry guys. Just gonna overlay this on here. I don't know why that was so difficult for me, but you guys get the point. Oh, okay, it's supposed to be like this. Perfect. So the market structure was trending down like this for this low. Wow, we gotta move everything over now. But basically it was just trending down. Damn, that was like a little bit weird for my brain. But anyways, you get the point. So you had that level 2 and that broke back right here, and you're using that domino effect, right? So you got that breaker structure. This is that level 1 high, and then the red drawing can continue and then break that regular market structure. So maybe putting that back to blue. So then you get that level 1 break. So this is the level 2 breaking. This is that level 1. Apologies for the drawing, but we can also kind of do that with fair value gaps. I'm still watching the lowest one though, that obviously like the domino effect, it is the same. So have this 1 minute right here. And we just inverted that right there. It's not too convincing. And that next candle right there inverts that 1 minute. So confirming rotation down. Arguably, that is an entry right there. But if you want to be more sure, see that 5 minute? That 5 minute closes right there. So a couple different ways to play this. If you like this LPSY play, short candle body, the 5, unless there's a rejection block. It's not the best. Put it above that though. Put it above that high just in case. So you have your basically two layers that you can take here. So put our nice return to zone on, because we're thinking about entering, making sure we have everything lining up here. At that POC, you get the value area high right there. So breaking below that value area high, check, put it on the checklist. So it's basically up to you which one you want to take. If you want to put a contract here and a contract here, 2 contracts here, like whatever, however you want to play it. I just played it like this. I believe something like this. So we can now be confirming this as an LPSY. Based on, so it was very interesting. Hopefully you saw me fumbling around with that market structure drawing. I don't know why it was that hard for me, but the level 2 break, it did domino down to get that 5 minute inversion. So just to be safe, taking that, you would have been wicked in right there, and definitely right there. So in each case, both get hit. Both levels are getting hit. Let's check that 5 minute candle body. And once again, candle body remains supreme. Really like that, guys, if you see my videos. But, obviously the safest play here, the dog play, is going on that highest time frame candle body. Sometimes I've seen it, almost always getting respected. So going to put the sniper entry on here for that 1 minute, just so you can see a high vision. But it's basically, this is the main one. This 5 minute right here, this guy right here, that is the main guy that really allows the play to run. Maybe take this off. And put this one. Because that is the absolute sniper entry right there. That's the algo right there. And so it doesn't matter which entry you catch. I like this one too. I like this one arguably better, just in case we did hit it and go down, right? Which is always a possibility. And then from there, get another reconfirmation right here. So even if all of this, check this out, guys, like it's just like market structure. It is just like market structure, and you can combine them. So see how we're combining them here. So let's say you missed this re-entry. You weren't sure. Watch the highest time frame fair value gap again. Okay. That is this 2 minute right here. This 2 minutes. So say we didn't take any of these entries, guys. Say you were like, we're in a higher time frame accumulation. We're going to go higher. I'm not too sure. But then you see the breakdown. Then it's coming up here like, I'm not too sure. Then you see another reconfirmation. So this is exactly like Wyckoff, like using breaker structures, but you're using these inverse fair value gaps. So say that you wanted this reconfirmation. Now you're getting it there. This candle closure right here, you're getting it there. I'd probably go to this high. And still you're running it down. So many ways that you can still be getting in the play. You can keep waiting. You can wait for another reconfirmation there when this is more aggressive, or you can just be in the play and you can just be accepting your risk. And what does price do? TWAP move down, bang, smashing target. So just so many different ways you could have played this. I think I posted on X showing the highest vision, which was this one. But this IFEG right here, this fair value gap that gets inverted, that is the one that makes the play. The other ones are to get you in though. Like look how clean this reconfirmation is. Like that is a thing of beauty. If you also want to use supply, I use supply as well to up the chances, you know, and also for stop loss placement. So it's really good to know your supply level as well, obviously. So everything is working together. So you do get that supply created right there with that candle. Then you get the inversion right there, come down, fills your limit, and then you know to put your stop loss above that supply because you really would not want to be getting above that. And here is your trade on a beautiful SW2D, an SW2 Solari Wyckoff Model 2. Our symbol for the SW2s is this shining star. So that will basically conclude our session and trade review. So my trade was up here somewhere. I think it was here even, just like market ordering, candle body like that. So that was my trade. It wasn't the highest RR. It was around a 2.8, but just wanted to show all of the other entries that were present in all the different ways that you can get in these SWT models using inverse for value gaps with Wyckoff knowledge, combining everything together for these trades. So I think that's a good place to finish off the video. If you guys did enjoy, thank you for sticking around to the end to see the finished product. I'm doing these more long form content videos as we are building the system and really going into depth. I want to give as much value as possible in these videos, so that's why they are a bit longer. We're going into every single detail that I'm seeing out here through these sessions on NQ, and I hope you're enjoying them as much as I am trading them and reviewing them. So, all right, guys, I've been CJ. This has been another session and trade review, and I will see you in the next one.